This is Steve Burns,
Whoa!
a true legend in trading circles. What makes him stand out? He turned a simple EMA crossover strategy into millions of dollars.
Damn!
Yeah, just a couple of moving average lines crossing, but done the right way. Before you think,
Great, another moving average video.
listen up. Steve's method isn't just slapping two lines on a chart and hoping for the best. He has a specific setup with rules that filter out noise and keep only the best trades. Today, you'll learn exactly how he did it, step by step. Open your TradingView chart. If you don't have an account, go to tradingview.com and sign up. It's free and widely used. Click the indicators button at the top, the squiggly line icon. Type EMA into the search bar. Select the EMA indicator twice to add two exponential moving averages to your chart. Make sure one EMA is set to 9 periods and the other to 21 periods. To check or change, hover over the EMA line on your chart, click the gear icon to open settings, then adjust the length accordingly. The 9 EMA, the blue line, reacts quickly to recent price changes, while the 21 EMA, the red line, smooths out the trend over a longer period. When the 9 EMA crosses above the 21 EMA, it signals a potential uptrend, and when the 9 EMA crosses below the 21 EMA, it signals a potential downtrend, but don't act immediately when lines cross. Look for confirmation in the price itself. For a bullish crossover, price should make higher highs and higher lows, like climbing stairs. And for a bearish crossover, price should make lower highs and lower lows, descending stairs. This confirms momentum aligns with the crossover and reduces false signals. Volume tells you how many shares or contracts have been traded during a specific period. This is important because high volume means more traders are actively participating, which adds strength to the price movement. To add volume to your chart, click indicators again, then search for volume. You'll see bars appear at the bottom of your chart. Each bar represents the volume for its corresponding candle above. Pay attention to volume when the EMAs cross. A crossover accompanied by rising volume confirms that the move is supported by strong market participation. If volume is low or dropping, it could mean the crossover is weak or a false signal, so it's better to wait. Steve waits for the EMA crossover plus confirmation from price action and volume before entering a trade. For a long trade, the 9 EMA crosses above the 21 EMA. Price forms higher highs and higher lows. Volume increases during and after the crossover. For a short trade, the 9 EMA crosses below the 21 EMA. Price forms lower highs and lower lows. Volume increases during and after the crossover. To manage risk, place your stop loss just below the recent swing low for long trades. For short trades, place the stop loss just above the recent swing high. For take profit, aim for the next significant support or resistance level, or a recent swing high-low in the direction of your trade. This gives you a favorable risk-to-reward ratio. Let's break down a real example using the 1-hour chart of a popular stock. Let's say Nvidia to make it concrete. So, first off, we notice a strong downtrend, lower highs, lower lows, clear bearish momentum. But suddenly, the price begins to slow down and move sideways. Then it happens. You see the 9 EMA, the fast-moving average, cross above the 21 EMA, the slower one. This crossover is your first signal. It suggests that short-term momentum is starting to flip bullish. But we don't just jump in yet. We need confirmation. And that's where price action and volume come in. As the EMAs cross, price starts doing something crucial. It forms a higher low, then pushes to a new higher high, confirming the trend shift. And right here, we get our golden confirmation, a sudden spike in volume. That tells us real buyers, possibly institutions or whales, are stepping in with conviction. This volume surge acts like a green light, backing the EMA crossover and the price breakout. So now we've got EMA crossover, market structure shift, volume confirmation. At this point, an entry right after the higher low, as price breaks above the previous high, is ideal. Stop loss goes just below the higher low. If price dips below that, the reversal is likely invalid. Take profit is set at the next major resistance, like a previous high or supply zone. This setup is clean, logical, and precise. In backtests, trades like this consistently showed high accuracy, especially when volume supports the move. And that right there is how you get a perfect trade. This strategy isn't magic, but it's a proven way to catch strong trends early. Steve Burns made millions using it, and now you can learn it too. Stick to the rules, manage your risk, and always wait for confirmation. If you found this valuable, hit subscribe for more trading strategies. And if you're wondering why your stop losses keep getting hit, watch this video next.